Alright, welcome back to MMG. Let's do a quick pre-market update for you guys. So, first of all, not financial advice. Consult your financial advisor before doing anything. Stocks are extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. I'm not a licensed financial advisor. Consult your financial advisor before doing anything. Play stops, emotions out. Okay, so the dollar tanked, as I said it would. It is coming up on support on the daily. It'll probably bounce. They'll put in a bottom. And that's just what I think about the dollar for now, for the short term, for the next, I don't know, few days this week coming up. But the long term, on the weekly, I think we could easily revisit the 200-week moving average, which is at pretty much the 95 handle for the longer term. All right. What else? So the S&P, the Dow. Let's talk about equities. All right. So there's an ascending triangle on the S&P 500. This is the daily chart of the S&P 500 index. It's an ascending triangle. It's a little over extended here. The TD's telling me to sell. Oscillators are overextended, and I think the market's going to sell off this coming week before the FOMC meeting next week on the 29th and 30th. And it would make sense for the price to revisit the 78.6 fib retracement. There's also major support there, and it would trade within inside this giant ascending triangle. Then I expect a huge bounce and a rebound, possibly to test the top of the ascending triangle, or maybe even break above it, and making new all-time highs, depending on what Jerome Powell says and does with the interest rates. He's going to cut at least 25 basis points. You never know. They might cut more. If they do that, then the market's definitely going to take off like a rocket. But that'll be next week. So, if we take it to a weekly here, we zoom in. So maybe one this week, it'll sell off a little bit, maybe into next week, Monday and Tuesday, and then the price will bounce probably, I'm thinking, more than likely, because Jerome Powell's going to be a uber dove. Believe me, he's going to be real dovish, because they need the market to end on a higher note on the fourth quarter of 2019. So 2020 starts off strong in revenues, and people keep shopping for the holiday seasons that's coming up this next month and the month after, right? We need to end this year strong, and Trump needs that as well. Russell, not that the Fed is helping Trump, but the Fed is probably so scared of letting the market drop 15% that, I mean, if you guys remember, Mnuchin, the market dropped what? 20%. Mnuchin started calling all the banks, and then he came out and said, all right, guys, no worries. The banks are fine. And everyone's like, no one said anything about the banks. This is just a normal correction. Back here, beginning of 2019, right here. See this huge drop? That's when Mnuchin shit his pants. So they're scared to death. They're really afraid of letting the market drop in any significant way. So the Fed's going to come out and it's going to have the markets back. All right, this is the Russell 2000 daily chart. This is sort of a, I don't know, bull flag, kind of. It's trading in this range and falling, but it's kind of like a bull flag, and I expect the price also to rebound. Well, it's going to fall for this coming week and maybe Monday of the week after, and then possibly a bounce off of the 38.2 fib retracement somewhere down here. And then, like I said, I think Powell's going to be real dove, and the market's gonna recover and possibly make new all-time highs to end this year. I don't know. I don't know, honestly. We're going to find out on the 29th and 30th, right? I'm not sure which day they speak. Probably the 30th and 29th. I'm not sure. I have to look at it. All right, so here's the NASDAQ. Looks a lot like the S&P 500, except the NASDAQ's really strong. It's really trying to make new all-time highs. But again, it's going to pull back, trade within this range of this ascending triangle. I expect it to make a new higher low somewhere around 7,600. It might fall to 7,500. It depends what the news cycle is this upcoming week. If it's really bad, then it'll revisit the 23.6 fib retracement or possibly bounce above it. And it'll be going into not this upcoming week, but the week after, right? Tuesday and Wednesday. That's when I expect the rebound on the equities. FANG stocks, FANG index. This is a 3-day chart. So the 3 count broke down. The 3 count breaks down in a TD on the TDI, because you need a 1, 2, 3 count, and you need the 3 trading above a 2 for it to sustain the momentum to the buy side. But it broke down on this 3-day chart. Nobody looks at the 3-day, but I like looking at it. So the RSI is overextended to the upside. The momentum indicator, I think there's more downside on the FANGs as well, index, and possibly retest 2,500 on the FANG index. All right, gold and silver. So the weekly on silver, the MACD just crossed to the downside. So the weekly is slightly negative, although there's a greenish Shimoku cloud, Kumo cloud. The price already dropped on silver to my blue equilibrium line on the right here. This is silver on the right. And bounced right back up. And looking at these candles, there's a lot of buying. A lot of buying, anywhere from $17 and up. So we are on a 4 count to the downside. Technically, I'd say this is a 6 count to the downside. So whenever it hits a 9 count, it's going to go in the opposite direction, right? So if you get a 9 count to the downside, and this is a weekly chart, so technically 2 to 3 more weeks of downside in silver. But, if we go to the daily chart, I've got buy signals. And the 50% fib retracement held up, bounced off to 61.8. There is a reddish Shimoku cloud. So, silver might trade sideways for a few, definitely for this week coming up. Slightly higher sideways. And then I bet metals will break out to the upside, as Jerome Powell is going to be probably a dove. That's what I'm betting on. I can't guarantee it, right? But so let's take a look at gold. I think gold's more interesting right now. Weekly. It's oversold on the weekly. It's on the 6 count on the weekly. I've got blue candles. That's my proprietary. Well, it's the indicator I don't want to share. And then the blue candles signal a buying opportunity. It is on the 6. Let's take it to a 3-day, then a daily. 3-day. It's perfect buy signal right there, and we bought, right? I'm still long. The RSI is extremely oversold on the 3-day. MACD oversold on the 3-day. Looks like it could cross to the upside in about a week from now. Let's take it to a daily. Daily, well, the MACD is overextended to downside. It's going to cross eventually back up to the upside. So a bullish divergence there. The RSI, it's neutral. So the oscillators aren't telling me too much. The pattern, I did have a bull flag. I guess we could extend it out a little further. Right? That's what you do. And I think metals are just waiting for the next FOMC. That's all it is, guys. And metals might, I think metals will trade slightly higher this upcoming week, but nothing too crazy, just sideways action. If we take it to the 12-hour, hours neutral, the price really needs to break above. It needs to get back above 1500. If it could do that this week, that's a good sign. And then once it gets above 1530, then it's gonna shoot back up, and then this bull flag will play out, and possibly new all-time highs for this year. It really depends on the next Fed minutes. Oscillators, let's say they're neutral, but they could turn bullish next week. Not this week coming up. Today is Sunday. I'm talking about pretty much the 29th and the 30th, right? When the Fed is going to have their conference and their rate decision, right? So I'm still bullish for now. I've stops in place, right? I do not want to see the metals price break below 1480. It might break below it intraday, right? But as long as it doesn't close below 1480 any day of this week coming up and stay below 1480 for like days, which I don't think is going to happen. It might go under 1480 for a day, but I think buyers are going to step in again, and because everyone's anticipating the next FOMC, right? All right, so let me and you know what, the metals ETFs, they're bouncing off of major support due to moving averages, like the 200-day moving averages and the 100-day, and even so I'm still bullish for metals for possibly the next few weeks and months. Eventually we'll get a huge correction. I'm hoping the price could get up to 1600 or 1680. That'd be great. I do not expect all-time highs to be taken out in gold like past 1900. That's not what I'm expecting. I'm expecting 1600, 1680. That would be great. I'd give it about a 70% chance. So there's still a good chance that the metals market gets slammed, by the banks, and then it goes lower and lower. But honestly, with all the turmoil around the world, watch my last video I posted last night. I mean, there's riots in like 10 countries. And it's all about economics. That's what they're all rioting about. Because they can't live, right? In the second and third world countries. Even in first world, like France. Alright. I want to read this to you guys. I like Mike Pinto. He's one of the guys I trust and knows what he's talking about. So it's titled Gold. It's all about real rates, not the dollar. And this is what I've been showing you guys in my charts for the past few weeks. Like, I found a really great indicator. And hopefully this doesn't catch on to too many people. But as long as they can keep the 10-year rate down, and that's what the Fed's goal is, metals are going to go higher. So the 10-year, you don't want to see that spike. When it does spike, markets will dump. So will metals probably because of margin calls and because the rates are spiking. But they're probably aiming to get the rates back down on the 10-year. They can't let it spike, the Fed. So as long as the Fed can maintain some control, metals should keep rising. Where is it? Alright, so let me read this. Again, the primary driver of gold isn't the direction of the dollar, but the direction of the real interest rates. Hence, if the U.S. growth is accelerating in a non-inflationary environment, gold should suffer regardless of the direction of the U.S. dollar. Conversely, the The dollar can be in bull market against a basket of fiat currencies, and it has been for the past year, and yet can still lose significant ground against gold as long as nominal interest rates are falling in an environment of rising inflation. So even with the dollar index going up, right, it didn't matter. Metals went up even more. So you saw the dollar and gold go up together, and I said that would happen. You can see gold, dollar, and stocks go up together. The year-over-year change in core CPI increased 2.4% in August, which was the highest level in a year. All the while, the U.S. 10-year note yield was crashing from nearly 3 to 1.6% over the past 12 months. Therefore, real yields have been crashing as gold has been rising. So again, 10-year yield. These falling real yields were rocket fuel for gold, and this was in spite of the USD bull market against the euro and yen. The price of gold increased by double digits, even though the dollar index has also increased by nearly 5% in the last 12 months. But still, for those of us who love gold, it can be a love/hate relationship. It is still down 20% from the highs made in 2011, and the mining shares have crashed by 60%, underscoring the need to know how to trade the cycles of this sector. Correct? The question for gold investors now are, have nominal yields stopped dropping, and what is the direction for the rate of inflation? In the short run, the answer to that question can be found in the trade talks scheduled for October 10th and 11th, which is it's already done and with. The reason for this is the boy has cried wolf once too often, and it is now time to poop or get off the pot when it comes to reaching an agreement with China on trade. And yes, that boy is Donald Trump. Wall Street and international corporations cannot do business under this cloud of uncertainty any longer, where one day tariffs go up and the next day they are coming down, which is true. It's like the boy who cried wolf. I've shown you guys that hilarious meme, tough on trade, great deal, tough on trade, great deal. Eventually, it's not going to matter, just like Brexit. Since early 2017, investors in the suit have dealt with perpetual series of dizzying trade war escalations and treaties. Just this September alone, Trump raised duties on China in the first. All right, so this article is it's pretty old, but it's from September. But, he was talking about this back then. So, let me finish these few paragraphs. The Fed's broken models have caused it to fail to grasp the debt-disabled condition of the developed world. China can no longer boost global GDP because it cannot significantly add to its 40 trillion debt pile without cratering the yuan. Also, fiscal and monetary policies are already extremely stretched and are unable to easily pull the economy out of its malaise. Global growth is faltering, and U.S. GDP growth has shrunk from over 4% last year to under 2% in Q3, according to Atlanta Fed. The most important part of the yield curve remains inverted. There is a liquidity in the repo market. DC is in utter turmoil, and annual deficits have vaulted over the $1 trillion mark. The Q3 earnings report card about to arrive, and it will receive an F. All right, so not much has changed except for the fact that now we have repos, right? So the Fed's balance sheet is exploding. It's going to hit $4 trillion in I don't know. It could be by second quarter or the third quarter of 2020, and that's essentially QE, right? So this repo purchases, it's not QE. I mean, he literally had to say that, but it is because the balance sheet's rising for the Fed, and who knows what else they're doing? They can't be audited, right? So, we have QE, we have global slowdown. China is literally falling apart right now. And watch my last video. And the trade talks, they're not going to get any better, guys. Watch my last video, right? There's going to be no trade deal. And now there's tariffs being put on Europe as well. I don't know how they're going to keep the market going higher besides helicopter money. Rates are going to zero in the U.S., and then they're going to do QE. And if the market hasn't anticipated this yet, they're going to soon. And when they do, stocks will go up, dollar will tank, and metals are going to go up. All right, guys, smash some likes, leave anything in the comment section. Please share my videos. It's the only way my channel grows. And I will continue to do these videos. They do get edited sometime. It takes hours to upload them. So go to my website. Free stock data analysis on my website. And then report. And then $10 a month to be in the private group where you guys could learn and watch me trade, and I do updates, and there's more juniors and micro caps for speculative purposes that we look at, and we share information and stuff like that. It's a chat group for trading and investing. Until next time.